Hey everybody, Real Estate Ninja, I hope you're doing well. You know what's not doing well? The US banking system. We have a big, stark warning from multiple banks. And the reason why it's a warning, because they are right now in front of senators trying to convince the senators and you, the American people, that if they are supposed to, or they're being forced to hold back just a little bit more of your deposits for safekeeping, for higher FDIC insurance costs, for the hopefully the non-failure of their bank, that they won't be able to compete. Let me explain this a little better. Basel III rules dictate that banks in America and around the world need to have higher reserve ratios. The Federal Reserve came out and said to all these big banks, hey, we need you to hold back what equates to around 3% more of depositors' funds for safekeeping. You can't go out and gamble all their money because we don't want you to collapse. This is how bad it is. Right after that, this last June, Brian Moynihan from Bank of America was the first one that whined about it. Then it was Jamie Dimon, CEO of JP Morgan. And now you have today these big CEOs threatening that the well-being of Americans and the banking system hangs in the balance of this additional 3%. This is a very simple way of putting it, but this should be the shot across the bow that everyone should hear. The banking system is weak right now. And I'm gonna go through the story on CNBC, it just came out, and then we're gonna talk about the implications of what I believe is coming in 2024, all right? Now, again, out of CNBC, this story is entitled, Wall Street CEOs Try to Convince Senators That New Capital Rules Will Hurt Americans as well as banks, all right? It says here, Wall Street CEOs on Wednesday pushed back against proposed regulations aimed at raising the level of capital they'll need to hold against future risks. So they don't want to hold back capital. They want to risk more of your money. Please understand how big of a deal this is. Even though you don't see everything crashing down right now, there's a reason why they are on Capitol Hill. It says, in prepared remarks in responses to lawmakers questioned during an annual Senate oversight hearing, the CEOs of 8 banks sought to raise alarms over the impact of the changes. In July, U.S. regulators unveiled a sweeping set of higher standards governing banks known as the Basel III Endgame. Just curious, how many of you people own, you people, me too, you people, how many of you own gold or silver because of something like this? Just curious, I'm just curious. Type gold or type silver down below. This is going to be big news at the end of 2024. It says here, let's go on with the story. If unchanged, the regulations would raise capital requirements on the largest banks by about 25%, Jamie Dimon claimed. That's what? Regulation raise capital. Oh, yeah. No, that's not 25%. So, yeah, they're adding a 3%, but I'm telling you, it's interesting how they wordsmith, because they don't have to hold back that much. And the regulations were they had to add an additional 3%. But if you look at the 3% in, compared to how much they hold right now, that would be raising it 25%. So it sounds like a big deal, but it's actually not. I don't remember off the top of my head. Let's see if the story talks about it, but how much they have to actually hold back. I want to say it's 9%. It says the heads of America's largest banks, including JP Morgan, Bank of America, and Goldman Sachs, are seeking to dull the impacts of the new rules, which would affect all U.S. banks with at least $100 billion in assets and take until 2028 to be fully phased in. Why? So think about this. Think about this. Why would it take till 2028 to phase it in? Hey, we need you to hold back an additional 3% of customer deposits. Well, yeah, that's going to take like 3 years to figure out because we have stretched our bank so thin and gambled so much. It's going to take a while. That's what's going on. It's very similar to when Germany, I don't know if people don't realize how this happened. Around 2014, 2015, Germany was actually afraid that the gold that they put on deposit with the government, the U.S. government from World War II, that it wasn't there. I know it sounds crazy. So those crazy Germans sent over a delegation of important people. And they went and they came over here because they asked for their gold back, and the Fed says, yeah, no problem, we'll give you your gold back. It'll take 7 years. And they're like, what? And so they cruised over here and they found out, yeah, we don't got their gold. Weird. So you're seeing very similar things with the banking system. Oh, you want us to hold back another 3% of customer funds? We can't gamble with it? Yeah, it'll take like 3 years, 4 years. This is really important information. Now it says it would also likely help non-bank players, including Apollo and Blackstone, which have gained market share in areas banks have receded from because of stricter regulations, including loans for mergers, buyouts, and highly indebted corporations. You see, so they're squeezing the banks. The banks are complaining. They're letting BlackRock and Blackstone and Apollo run crazy. But just, that's your pension money. I hope this is pissing people off. While all major banks can comply with the rules as currently constructed, they say it's constricting, it wouldn't be without losers and winners, the CEOs testified. Those who could be unintentionally harmed by the regulations include small business owners, mortgage customers, this is where the threat's coming, I'm going to explain it, pensions and other investors, as well as rural and low-income customers, according to Diamond and other executives. Let me stop and say this is the entire thesis of why I wrote I'm not joking, the how to prepare for this real estate crash. Because the threat that they're shooting across the bow, Diamond saying how it's going to hurt business owners, and let me get the right words here, let me stand by. Small business owners, mortgage customers, and pensions, because they're saying, you know what, you want us to hold back 3% more of the customer's funds we can't go gamble with? All right, we're going to make less loans. And this is exactly in line with what happened in 2005, 2006. Loans shrunk down. They got less available, harder to get. Anybody that could qualify by that back then could get a loan. There was no problem with that. But points went up, fees went up, rates went a little higher. And what they did is they put the government into a position where they said, all right, you want us to be nice to the consumer because they're so strung out on debt like a coked out debtor, for lack of better terms, then start flooding us with liquidity or let us break some of these rules. They did this back then too. That's why you want to be ready for this real estate crash, because when the speculators, the people that don't think too right, are out there racing around trying to buy up real estate and they can't get those loans for what they used to get them for, things come to a grinding halt fast. Now they've already come to a grinding halt, but it's going to get better. By the way, 80% off links down below. This is the last month that the course is going to be this much. It's going up in January. It says, with the rise, oh no, this gets even better, sorry. Jamie Dimon goes on to say, mortgages and small business loans will be more expensive and harder to access. You guys know that I don't read this stuff ahead of time. No joke. Can't make this crap up. Particularly for low to moderate income borrowers, Diamond said. Savings for retirement or college will yield lower returns as the costs rise for asset managers, money market funds, and pension funds. How do you like that? Just being threatened. Just threaten the American public. Solid work, Diamond. With the rise in the cost of capital, government infrastructure projects will be more expensive. How cool? Let me just take a little sidebar. Wouldn't it be super cool if one of the biggest bank CEOs just came out and said, you know what? Yeah, you know what? We're gonna start advertising that we're not gonna gamble your funds like that. We're gonna be safer. The safer bank. Boy, I bet you get so many right now with everybody being concerned with what's going on in the banking system. If one CEO said, yeah, you know what? We're gonna treat people like I would want to be treated with my bank account and not gamble your funds away or do these bail-ins. We're gonna do things sort of normal. I bet you they get a lot of business. Type 3 if you agree. It says the changes would increase the cost of borrowing for farmers in rural communities. This is now the Citigroup CEO, Jane Fraser. You know, the lady that's in the middle of laying off tons of staff because she can't make her bank work. Totally failed experiment, but she had to jump in with the threats too. She says it could impact them in terms of their mortgages. It could impact their credit cards. It could also importantly impact their cost of any borrowing that they do. Good job, Jane Fraser. I think you got your fear tactics across. Finally, the CEOs warned that by heightening oversight on banks, regulators would push yet more financial activity to non-bank players, sometimes referred to as the shadow banks. I don't know if you guys know this. I'm just talking to you, CEO of JP Morgan, Wells Fargo, Bank of America, Citigroup, and all those other stupid banks. Hey, I'm just letting you know. We already know that there's shadow banks, and you guys probably have some stuff going on too. Little shadowy, especially you, Wells Fargo. All right, finally, I said the tone of lawmakers questioning during the 3-hour hearing mostly hewed to partisan lines, with Democrats more skeptical of the executives and Republicans inquiring about potential harms to everyday Americans. Senator Sherrod Brown, an Ohio Democrat, opened the evening by lambasting banks, lobbying efforts against the Basel III endgame. He goes on to say, "You're going to say that cracking down on Wall Street is going to hurt working families? You're really going to claim that?" said Brown, who chairs the Senate Banking Committee. "The economic devastation of 2008 is what hurt working families." That's not true. "And the uncertainty and the turmoil from the failure of Silicon Valley Bank hurt working families." Oh. Well, let's just see here. Senator, what's her name again? Senator Brown? Sherrod Brown. I would like to talk to Sherrod Brown. You are 100% wrong. Actually, it was the failure of banking institutions to safely guard against the out-of-control risk that was brought on by commercial mortgage-backed securities and mortgage-backed securities that actually led to that. That was out-of-control lending when they would give anybody a mortgage, including someone's dog. See, the fact of the matter is, everyone, the banking system is collapsing. We've already experienced, on a dollar scale, a bigger collapse in 2023 than all of 2008 combined. We have the Fed repo window open, which, just to give you some scope, it's been open for a while, right? Put down in the comments below how long it's been open. I don't remember. Fed repo window to bail out the banks and to provide liquidity for the banks during the Great Recession didn't even start till after Lehman Brothers had collapsed and closed their doors 4 months afterwards. The point is that right now we are in a moment where things are way worse than 2008. Your family and friends think you're nuts. Good news. I'm nuts too. I am the real estate ninja. I'm calling an epic downturn in real estate across the country. Why? Because lending is going to get tight due to 2 factors. The banking and government's going to do it on purpose, but also because things just got so out of control with that darn pesky inflation. Remember when Jerome Powell said it was transitory? Yeah, and now everyone's believing everything he says? I don't know. I wouldn't believe him. Type 4 if you don't believe him, type 5 if you do, and type 6 if you just don't care. Point being is this: if you're not ready, you're not going to get to take advantage of this. So start doing things right now. Get out of debt, get your credit score up, save some money, start planning, start aggressively planning, and learn as much as you can from every aspect of the economy right now. I can't say it enough. Put those 80% off links down below. I can't wait for this sale to be over, which is the end of the month. Not joking, because we're going to move on to something really, really big. With that being said, the Real Estate Ninja is out. Thank you for blessing me and my